You're listening to the Multifamily Marketwatch for Washington State. Apartment owners who need to know, trust HFO. The leading source for multifamily industry news around the state, from Puget Sound to the Tri-Cities.
Welcome back to Washington Multifamily Marketwatch. I'm your host, Aaron Kirk Douglas. The top news this week: Trepp released a new report detailing a significant jump in CMBS loan delinquency rates. Multifamily Housing News offers insight into the alarming shortfall of apartment homes nationwide. And we get some insights from the 2023 Multifamily Risk Survey published by the National Multifamily Housing Council, which just unveiled how rising insurance costs are putting owners, operators, and developers of rental housing under increasing financial risk. All this and more in just a moment. This Washington Multifamily Market Watch is co-sponsored by Gantry Inc., the largest independent mortgage broker in the nation, and by J.R. Johnson, experts in multifamily restoration and repair work. Trepp research reports that the May delinquency rates for CMBS loans have seen the largest overall jump since June of 2020. The rate is up 58 basis points year to date. Today's delinquencies stand at 3.62% overall, up from 3.14% a year ago. The largest increase in delinquent loans is in the office sector, with lodging showing a decline. Multifamily delinquencies are up less than 0.5% to 1.46% overall. Trepp also released a report this month indicating that the multifamily sector will see over $20 billion in loan balances maturing by 2024, with current rates at 5.5%, putting some owners at risk of default, particularly in the Washington, D.C. and New York markets. Multifamily Housing News released a special report on the nation's ongoing shortfall of apartment homes. The report indicates that 4.3 million new units are needed by 2035, with a current shortfall of 600,000 homes. Underproduction of housing the past few years led to a loss of 4.7 million affordable units between 2015 and 2020. And Seattle Metro is cited as needing about 95,000 new units by 2035. The National Multifamily Housing Council published its 2023 State of Multifamily Risk Survey and report this month. The report states that owners, operators, and developers of rental housing have been hit hard by insurance costs, which have risen an average of 26% over the last year. The result has been increasing financial risk and increasing rents to residents. The report calls on lawmakers to look for ways to incentivize a more robust insurance and reinsurance market. Yardi Matrix reports that demand for multifamily remains strong, with asking rents rising an average of $7 per month in May, with year-over-year growth decelerating to 2.6%. That's the lowest level since March of 2021. Yardi says Seattle rents increased 0.7%, and ApartmentList.com reports Tacoma's apartment rents increased 0.5% in May, matching the nation's overall rent increase. Year-over-year rent growth is now pegged at 2.5% nationally, and year-end rent growth in the Seattle metro area is forecast at 2.8%. In news around the Seattle Bellevue area, multi-developers are bullish on Bellevue. An office building that once housed a Washington Environmental Agency has been purchased by Intracorp for $18 million. The 3.5-acre site has parking and a 60,000 square foot building. Intracorp has not announced any development plans, but it has built more than 25,000 apartments and townhomes in roughly 140 projects in the U.S. and Canada since the 70s, with more than two-thirds of its development in the Seattle and BC regions. A former QFC grocer on Capitol Hill is being torn down to make way for a 150-unit mixed-use development. Plans call for a 5-story project called The More. A 10-story apartment building with 202 units is slated to replace a low-slung mid-20th century tea shop in Chinatown. Seattle-based Housing Diversity Corp announced it will break ground this summer on a 202-unit development at 701 South Jackson. 114 of the 202 units will be affordable housing. Amazon has lent $10 million for an affordable housing project in Seattle's Northgate neighborhood. The 89-unit apartment community will be developed by WF North Haven. The Boeing and Employees Credit Union loaned an additional $17 million for this project. The total cost is not known. Western Multifamily Magazine says Seattle experienced 5 straight months of rent declines before rebounding 0.7% in February. Most experts agree the decrease was a temporary blip in an otherwise solid market, which is defined by high-paying jobs and a highly educated workforce, with tech jobs and AI and other related sectors leading the way for increasing jobs in the future. A recent survey by Zillow Research found that more than 80% of Seattle metro homeowners and renters support denser housing in their own neighborhoods, as more and more people understand that the key to stopping runaway housing costs is to simply build more housing. Although most people supported denser housing in general, only 58% wanted large multifamily developments in their neighborhoods. And in the outlying areas around Seattle, the Home in Tacoma project has scheduled 2 additional open house events to allow the public to comment on the city's housing plan. Future dates are June 22nd and June 26th. Learn more at cityoftacoma.org/home-in-Tacoma. The city of Shoreline has legalized cottage housing clusters north of Seattle. Shoreline's new rules will give density bonuses to cottage projects meeting requirements related to green construction, access to transit, and affordable housing. There's no minimum size limit specified for these cottages. And finally, the San Diego apartment investor MG Properties has acquired the 192-unit Artesia Apartments in Everett for $61.6 million. The deal was recorded the last week of May in Snohomish County. The Artesia is a 23-year-old property that recently completed an extensive remodel. And don't forget, you can stay up to date with the latest from the Washington State multifamily industry by following our blog at hfore.com and by subscribing to the HFO Multifamily Marketwatch podcast. Until next week.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information. HFO is an affiliate of the Global Real Estate Advisor Network.